I want to dive into now, if we think about back to what we started talking about, that's a way of thinking about how we can really work and live in tune with what really drives us, what really motivates us. And now we want to think about how we measure success. Because if what measured gets done, we need to measure what's important. The reason I track my sleep is because I know how big a factor that sleep is in my health, well-being, performance, happiness, everything. Every sort of single, it's probably the single greatest impact you can have on all of your health and well-being is getting good quality sleep. So by wearing an Oura ring, it brings my awareness and a score and a way of easily tracking whether I'm getting good sleep or not, and what I can do to make that better. And so that's really what we want to be doing in business, is thinking about, well, what are the most important things to measure? How do we track them? How do we make sure that we keep coming back to them? And that's what allows us to drive forward to success. Now, I apologize to Bavek, who's listened to me tell this story. This is now the third time he's listened to this story in just over a week. So I do apologize that you're listening to it again. But years ago, a friend of mine that lives in the US was over visiting the UK, and I wanted to take him to something quintessentially English. And so what better sports event that could you take him to than a test match of cricket? You know, a very quintessentially English game in the sense that after 5 days of playing each other at a sport, it can still end up in a draw quite often. And so anyway, we're at the test match, and after about 3 overs, he looks over at the score, he spots the scoreboard in the corner of the ground and goes, "What on earth is that thing? Is that telling us the stats for the whole season, or is that just relating to this game?" And of course, if you know cricket, and any cricket fans in the room? Yep. So you know exactly what is going on here. And the people that aren't interested in cricket are looking at going, I have very little clue what that is all about. But it tells you what's going on in the score, in the game. And the reason that the problem that he had is that he was looking at that going, I don't know who's winning and who's losing here. Because I can't read the scoreboard, I have no idea who is winning and who is losing at this match. And that's the same in business, isn't it? If you don't know the score and you can't read the scoreboard, then you don't know whether you're winning at the game of business or not. And so that's what we want to focus on here is, well, what are the key ways of measuring whether we are winning at the game of business? Now, I've talked about the Successful Business Scorecard a few times, but only sort of in passing. I haven't covered it since like really early on in the workshop. But also, I've just been having more conversations recently about what I think good looks like. I was speaking at a conference last week, and we were having a discussion around what we think is good here. And so I think my thinking has changed and evolved over the years. And I think really we want to know what scores we need to be tracking. We want to understand how we control the most important aspects of the business. We've kind of got to be able to see into the operations of the business to see whether it's working and make sure that the right bits are still getting the attention they deserve. We've got to be able to measure the results, and then we've got to find ways of constantly reevaluating different parts of the business. And so that's where we're gonna go through now and sort of think about, well, okay, so start with what are the scores that we need to know? Because like I said, if you don't know the score, if you can't read the scoreboard, you don't know whether you're winning or losing. And years ago, when back in the days where the pilot would invite people into the cockpit, would you like to come up to the cockpit? Obviously, that doesn't happen anymore. Now, some of you are too young to know that probably ever that existing. But years ago, when you could, as a kid, go up to the cockpit to see where you you went up into the cockpit of the aircraft, and you just look at it and you go, oh my God, there's this sea of dials and buttons, and like, how on earth do you ever fly a plane when there's all of that data and information and different dials and knobs to think about controlling? And when you speak to the captains, actually what they say is we only look at these 5 dials. We only look at these 5 dials. But if this dial is telling me a bad thing, I'll look at this section of the cockpit and look at those dials, because that will then tell me why dial number 1 is off. If dial number 2 is off, I've got these section of dials that I need to look at. So it's really about having some key numbers that we can focus on, some key metrics that we can focus on. And when one of those is not doing as it should, it's then being able to drill down and go, well, okay, now let's identify more clearly what's going wrong. The same happens when I started endurance sport. I was introduced to a platform called Training Peaks. So Training Peaks is, like the triathletes all know, that it's where your coach puts your training program, your swim, your bike, your run, and then you follow what they guide you. It gave me my current fitness score, how tired I was from the training I'd been doing in recent days, and the form. So your form was your fitness minus your fatigue, basically. It boiled everything down to 3 numbers. And when I decided I was doing my first Ironman, I wasn't paying for a coach, and a mate of mine who'd done many Ironmans said, well, I'll just give you I'll help you. He said, in exchange for pork pie, I'll guide you through your first Ironman. Yes, exactly. Well, actually, there's fat, there's protein. It could be worse, couldn't it? Yeah. But he just said, if you can get your fitness to above 100, again, it's not a percentage. If you can get your fitness above 100, you are in a position where you should be able to do an Ironman. I was like, well, that's really easy, isn't it? It just gamified the whole thing. But what's brilliant is you could then reverse engineer it. So I could say, well, okay, I'm going to go in and build a training plan with, I didn't have a coach building it for me. I was like, all right, well, I'll put 2 runs in a week. I'll put 2 bike rides in a week, 2 swims in a week. Maybe there'll be some week, and some will be longer than others. And I'd build it all and go, oh, actually, on race day, that doesn't leave me with a fitness of 100. He also gave me some numbers around the fatigue level that needed to be below that. And the way that you achieve that is then tapering off the training in the lead up to the race so that your fatigue drops, but your fitness doesn't. And but it just made it really easy. And then I could go, oh, well, actually, the training plan I've just delivered doesn't take me to 100. So I now need to up that running a little bit and up that cycling a little bit. All right, now that will deliver me to Now, I've no idea whether that was him going, 100 feels about right. But amazingly, I got it to a little bit over 100, and I did my first Ironman. And because you're never going to do an Ironman in training, you've got no clue you don't even run as far as you run in an Ironman during your training. So you're trying to understand how you're going to actually do it is really difficult. But basically, these 3 numbers just made it really, really clear. And when we interviewed, or when I think it was before Claire joined the podcast, when I interviewed Jackie Herring on the podcast, who's one of the top female pros in the half Ironman distance, 70.3 distance. She is a professional triathlete, and she swims less often than I do as very much an amateur triathlete. And when I sort of drilled into this part of the conversation and her training plan, it was like, well, actually, yes, in an ideal world, but she's a mum. She's like, I have to train, but I also have to spend lots of time with my kids. And I know that if I spend really as a pro, I should probably be swimming at least once, if not twice a week more than I am. But that is going to save me, it might save me 5 minutes on the swim. So by missing 1 or 2 training sessions a week, it costs me 5 minutes in a race, or maybe even 3 minutes. But if I was to miss that much training on the bike or on the run, it might cost me 15, 20, 25 minutes in the race. So she'd made a calculated decision based on the numbers of going, right, okay, now that I understand how I control the metrics, this is how I can get the best success based on that result. And when I interviewed Leon Chevalier about this, again, this same topic, this is also Training Peaks, He just said, it's really simple. The coach puts the stuff in the training plan. I don't question what's in the training plan. All my job is to turn it green. Green means I executed the training I was told to. Amber means I did an okay effort, and red means I didn't do it at all. So if I can turn the whole of Training Peaks green every week, I've done exactly what my coach told me to do. I've controlled the controllables. I don't need to know the detail behind it. So that's really what we want to be thinking about: is what are the key things that we need to measure? And then we do want to control the controllables, and because it's all very well and good saying, okay, we want to achieve this thing in business, but we've got to understand what levers it is that we can pull to achieve that thing in business. That might be to get the profit up to X amount, but you don't get the profit up to X amount by just going out and working on the profit. You've got to generate more leads, or generate more income from the current leads, or reduce the costs of the business with the same turnover to get that profit. McKeely Jones, on the podcast, we talked a lot about controlling the controllables. She was brilliant at focusing on, these are the things that are in my control, and therefore these are the things I can focus on. And all of the other stuff, she tells this amazing story where her bike hasn't arrived. It got held up at the airport by the airline. So she starts a race without a bike being in transition. But she's like, it's out of my control. If my team can get that bike from the airport and get it to transition, I'll be able to carry on the race after the swim. But all I can do is focus on swimming because it's outside of my control. Sure enough, that bike was in transition. By the time she got out of the swim, she ended up winning that race, which is quite amazing. But she focused on what she could control, and that's what we can do when we have the numbers. And in fact, there's a saying, and I think I read this from Google, but I'm not sure whose quote it is, but it says, in God we trust, everyone else must bring data. So almost everything can be boiled down to a number if you look for a way of doing it. Now, when it comes to people management, not all numbers matter, and not everything is managed by numbers. But with regards to the business, with the exception of the people, with regards to the business, pretty much anything can be boiled down to a number. Sometimes it's difficult to identify what that number is, and I'll come back to how we evaluate that in a bit. But if you can dial it down to a number, then you can start to go, okay, what's the target for that number? Are we hitting that number or not? And that's what we really want to do with a scorecard, is have everyone knowing what number it is. Because you see, in business, a lot of the employees don't know how they impact the business. But if they know on the scoreboard which numbers they are directly responsible for, it might not be that it's only them, but their role in the business is to make those numbers turn green. And at the moment, those numbers aren't turning green, then they know they are accountable for making those numbers turn green. So it's about trying to give people accountability and focusing on what's important. And one of the reasons why measuring all of the correct numbers is so important is because it allows us to, otherwise our focus tends to drift between different phases of the business. Now, this is really important. I know we were talking yesterday, Bhavik, about the fact that you've got these two different sides of the business. And I was talking to somebody this morning, and I thought of exactly this when I was, it was you, Annie, talking about the two different sides of the business. One's doing really well, one's not doing as well as you would like, because guess what? I bet all the attention's been on the one that's doing really well. Yeah, so this is really important. If you've got your finger on the pulse of the whole business, you can avoid these surges in things doing well and things falling apart. And the way I often describe this is that the business is like a sausage machine. You know, what tends to happen is that you go, all right, I've got all of these amazing new leads. I'm going to work on all of those leads, and I'm going to do a great job with those clients, and we're going to create this amazing client experience. We spend loads of time working on the clients, and we deliver this amazing thing, and we get to the end of helping that client, and then we go, oh, wait, I've got no new clients coming. I've forgotten the stuff. You know, it's the same as that sausage machine. If you stop putting the meat in and the whatever you call the sausage coating, guess what? Sausages stop coming out the other end. So we've got to keep us clear vision on the different parts of the process. And it's one of the reasons why having a real results roadmap, like we had for Efficient Portfolio, helps you, because once you've clearly defined what each stage of the business is, and it might be, for those of you that have more than one business, you have 2 real results roadmaps, that's fine. But once you've defined that journey, it's then very easy to see how we work, how's the sausage machine going? Am I achieving what I need to do here? I know I'm really busy here because I've got loads of new clients coming in, but if I'm not doing any of these, I need an awareness of that, because otherwise I'm going to end up with a surge of business and then a drought. So we really want to be thinking about the operations, and then we want to kind of get on to the key results. And Sir Clive Woodward, when he was managing the England rugby team, introduced a piece of technology called Prozone. He was the first person in the world of rugby to use Prozone across the world. It was in football, it was introduced by Arsene Wenger. And then very quickly, Sir Clive Woodward saw this and went, oh my God, this is going to be transformational. So what it means nowadays, it's that little pack that sits on the between the shoulder blades of the player. In those days, I'm not quite sure that's how it worked. But there's cameras all around the ground, and it means that they're getting live data. Initially, when they introduced Prozone, it was data after the game, but now they're all looking at live data to going, you know, how much is so-and-so running? Is so-and-so's heart rate off? And all of that kind of amazing data, because that allowed them to make far better decisions on how they, in real time, how they got the best out of the team. In fact, he tells this funny story about when the first game they introduced it, Will Greenwood, who's a bit of a clown, if you've listened to him, he's very funny, bright guy, but a bit of a clown, tells this funny story about how Will Greenwood kept running along, when the ball was in touch, i.e. off the field, Will Greenwood kept running along the back of the line. And he's like, I think Will's trying to run off an injury. I think he's trying to, you know, I might have to take him off in a minute. He's sort of getting another centre ready so that he could come on if anyway, afterwards, he's chatting to Will Greenwood going, but what was going on there? Why, you know, were you trying to run off an injury? He said, no, I just knew you were monitoring the stats and I wanted to have covered the most distance on the pitch. But it's when you've got that real-time data that you can make way better decisions to improve what you're doing in the business. And the way that Google do this is they have this system called the OKRs, which is essentially the same sort of system as we've just been looking at with regards to training peaks. Basically, it's what's the objective, what are the key results. And basically, every time you set a goal, you then try and create a way that you can measure it, and then you just assess it. Is it green? Is it orange? Or is it red? Are we hitting that goal on the time frame that we said? Are we getting that goal hit on a weekly basis? Because that just brings this awareness back. You know, if my Oura Ring was telling me I've had really bad sleep scores for the last week, and I've got to look at it and go, hang on, one off is fine, but a week is really, that's bad. And this is where you start to see those trends. Hang on, this is consistently not happening. So if it's good enough for Google, it's good enough for me. And to be honest, I'll come back to that. So one of the things that I think you should definitely be keeping track of, if you're not already, is where every new client comes in from. We call it the referral register, and keeping track of where all of those clients are coming in from and the sources behind them is really powerful, because what starts to happen, and we would keep them as individual clients on the list with all of the details of kind of source and everything else, but we would then pool them into categories. So for example, we might have accountants, solicitors, events, online, ads, referrals. And then each year we would map out what those looked like, because that allowed us to go, well, okay, actually, if we're getting lots of introductions from accountants, why aren't we speaking to more accountants? That is clearly a strategy that's working for us. Or if we're getting lots of client referrals, then how can we make that even better? If we've had as many conversations with solicitors as accountants, and we're getting loads of introductions from accountants and not from solicitors, maybe we're just banging our head against a brick wall with solicitors, and let's just focus on the relationships that are working really well for us. So this awareness is definitely incredibly powerful. And then we want to think about, how do we evaluate some of the numbers? Because sometimes it is really difficult to put a number on stuff. The obvious one, one of the obvious ones there, is how happy are your team? If you've got a team, are they like motivated, enthusiastic, love working with you, understand why they're doing what they're doing? Or are they a bit like, meh, yeah, okay, I get paid, but if somebody paid me a bit more, I'd go. Or if somebody gave me some more perks, I'd go. And one of the ways that you can measure that, because it is a difficult thing to measure, one of the best ways you can measure that is through Gallup 12. It's a series of 12 questions. You can pay them to do the analysis of all of the answers if you want to, but you can literally just get the Gallup 12 questions, ask the team, and create your own judgments based on it. It's kind of up to you based on, whether you've got a big team that you think it's worth paying for that analysis of or not. But it can be a really simple free exercise, and it can be, paid for really valuable, deep exercise to do with your team. But what it's doing is essentially giving you a number that is telling you how happy are the team. Are we doing, is this better than last year? Because if you start to see your team number going down, that's going to be a problem, isn't it? You're going to start losing valuable people. The second one is customers. How do you measure how? Sorry, did you want to take it? Did I just beat you to that, Tina? There you go. The next thing is how do you measure how happy your customers are? Because again, putting a number on that can be really difficult, but it can be really easy. So again, there is a solution that you could just pay for, and it'll give you that number. It's called Net Promoter Score. A lot of the big corporates will use that to basically survey their clients and customers to go, okay, are they happier now than they were a year ago? How can you continue to make them happier? You could just do it with a SurveyMonkey survey. So we had within the follow-up sequence to taking it after we took on a new client, so every new client would get it. And let's be honest, most don't fill it in. But everybody that became a client of Efficient Portfolio as part of that follow-up sequence was asked, we'd love it if you could complete a survey, because that allowed us to put a number on it. And then once a year, we'd go through an exercise of actually emailing everybody going, right, actually, please, can you? It's really important. And you've got to remember that when you're asking them to do this stuff, you've got to communicate it in a way, why is this good for them to do it? Not why is it good for us? I really want the data. No, how do we make this business better for you guys as clients? Well, we do that by finding out what you do, what we're not doing as well as we could do on, and improve it from that data. So it can be really simple, but ideally what you're trying to do is get it back to a number. And the reason that Net Promoter Score works really quite nicely is because anyone that scores you under a 6, it's quite high, isn't it, is a detractor. So we want the promoters to be, the promoters, the people that love you. These become irrelevant, the 7s and 8s. Somebody says, can you give me a mark out of 10 for how good this product is? You say 7. Well, they're not going to refer you to anyone. The people that refer you are the 9s and 10s, and the people that moan are these people here. So that's why they split it out into quite a, and the Net Promoter Score is calculated by the promoters minus the detractors. No. So you could have A's that don't like what you're doing because you're not delivering as good a service. So your ideal client is the person that's the perfect fit. But if you're not delivering a great service, then they might be rating you. They might still be a detractor. Because so that's why it's really important to know this stuff, because if you only asked your ideal clients, and it's a great question actually, because what you could do is you could be able to distinguish, we're going to send this survey to our ideal clients and this survey to the kind of people that we serve but they're not our ideal clients. And if you've got a lower score than you would want with your ideal clients, you've got to work really hard at finding out, well, what can we do to get that score higher for the ideal clients. So that might be a good strategy. One of the other things that I suspect Wayne, seeing this chart, you might have, like, I don't know, maybe, I'm sure you don't do it, I'm sure one of your team does it. But this trailing 12 months chart concept, I think, is brilliant. So I read about this in a book called CEO Tools 2.0 by, I think Jim Canson is his name. It's a goodish book. It's not brilliant. Its traction is better. But this concept stood out to me in CEO Tools 2.0. And this example chart is based on profitability. So red line is total expenses, orange line is turnover, and the blue line is profit. But what's different about this is a rolling 12-month average. And what it does when you create a rolling 12-month average, it shows you trends much more clearly. Like, for example, in financial services, you're typically going to have a good spell in the lead up to the tax year end. You're probably going to have a quiet summer. You probably have a good spell between September and November, a quiet December. So what this does is it smooths out all of those trends and allows you to go, but still the trajectory is right, or the trajectory is down. It allows you to see into the future. Now, this is just one example of how you might do this. We used to have a version of this chart for leads generated from different sources as well. So we can see, are we actually gradually getting more and more referrals over time? Because by averaging it out over 12 months and then rolling back, it just gives you these really clear trends. And I think it's really, like, to me, I'm definitely not an accountant. I definitely don't know. I don't like looking at the balance sheet and the profit and loss account. And, that's why I need somebody like Wayne that helps guide me through that journey. But this visualization of trends really, really worked well for me. I really liked it. And I think it's something that we can use in many different ways and many different trends. I think the key here is, and I know we were talking a minute ago about the importance of CRM systems, and I'm not saying that we have got this right at the moment at all. I think if you could automate your scorecard, I'm going to share with you the business scorecard, Successful Business Scorecard in a minute. Some of you will have seen it before, but I think in this day and age, the more you can automate this stuff, the better. And the obvious way you would do that is within a CRM system. We tried to do it within the back office system Efficient Portfolio, which was a system called Intelligent Office. We gave up. It was a nightmare. So that's why we ended up with a spreadsheet that we could just create as we wanted. But I think the more I speak to people about this and the more I can see it, the CRM that I think we're closest to using at the moment in Trusted Team is Pipedrive. I hear great things about Pipedrive, but and it's not super expensive. HubSpot and Go High Level are brilliant from a marketing point of view. They are expensive, but Go High Level is kind of digging into connecting up with AI so much better, as is Salesforce. Actually, again, we looked at using Salesforce, really expensive, but like all singing, all dancing. I think the dashboard that you create for me, Wayne, is in Futrally. Is that right? Yeah, I'm glad you said it because I wasn't sure how I say it. But yeah. No, well, I couldn't work that out. Obviously, Monday.com is another one. What I wanted to do actually at this stage is I wanted to just ask you guys what's working well here. Where are you managing your data from? What works really well here and what isn't working? Can I ask you though, to do this, can we use the mics that are on your table? You should have a mic each. I'm going to come to you, Steve, first, and I'm also going to definitely come to Wayne because I want your input on this. Because before we kind of dive into the detail, I'd really like to know what are the systems that work really well here, and what do you guys think the numbers are that we should be tracking as non-accountants that just need to keep it really simple? Is that on? Yeah, brilliant. There we go.
Yeah, the point I wanted to just make when you talk about automating scorecards, whilst I don't disagree with that, when I'm talking to my clients, and I do this all the time, you almost inevitably get to the point of these are the KPIs, these are the numbers I want to look at, but I don't know how to, or I can't automate them. And I would advocate every single time, without a shadow of a doubt, you measure the right numbers based upon what are your growth drivers before you even think about automation. Mm-hmm. Because the problem with being led by automation, and it's such a fad, it's such a trend at the moment, is you end up with a bespoken dashboard, and something like Futural is going to give you that, but actually it's measuring what every other business wants to see as opposed to the real things in your business. And if you say, well, it's okay because it's automated, you are missing out. You're definitely missing out.
I think that's a really valid point, and I think you've got to be measuring that, and that's why we've ended up back at our own scorecard, because the problem is that you've got to start with, these are the numbers that I need to measure, these are the levers that I can control and can the team can relate to. So you've got to find a way of automating those numbers, not be led by, oh, I can automate all of these numbers, that'll do, because that might well be irrelevant. So I think that's really valid. Wayne, any thoughts on this? Can you turn the mic on though, please? It should turn green. That's it.
Green. Is that better?
Yeah.
Yeah, I'd agree with that. I think the biggest barrier for most businesses in getting a KPI scorecard is actually being able to get at the data and produce it in a way that is useful and isn't so time consuming that it paralyzes them. And I think less is more in that respect. It's like Steve said, get to the things that really drive your business, spend the time identifying what that is, and then working out how to gather the data. Yeah, I mean, I don't think there are any great tools around to help you get at that. I think it's often that there are disparate systems. Certainly in our business, we've gone for rather than fully integrated systems, which tend to be not particularly business focused for accountants. They tend to be more compliance driven. We've gone for kind of best in class software in each area, and now we have that challenge of trying to join all that together to get the scorecard that we need. So we end up just populating it in spreadsheets and cobbling it together from various places. I think that's probably the key. The key challenge is how to automate that sort of thing.
I mean, I think that's why having a CRM that can automate the right numbers is really powerful. But as we found with Intelligent Office, that could deliver us a scorecard, but it was none of the numbers that were actually really important to us, or very, very few of them. And yet, in an AI world, we should be able to build a piece of software from scratch that should link up to the key pieces of software that we use that are the sources of the numbers that we want. Yeah, pass the mic to Tom.
Hello?
Yeah.
I don't know if this is helpful. One of my clients has built his own AI in what's the ChatGPT, but it's like your own lake. Yeah, and I think it's named itself Ethel, and he's had to feed it with all of the data from all of these different things for a long period of time. But he's, in theory, he's replaced a lot of his own work. No one yet knows it's someone else doing it, but I agree with you. All of these things are great if you fit their model, but it's very, and you've got generic outputs. Like, it's easy to kind of be like, these leads are coming in, but if you want that specific growth driver, as the chaps have said, I think yeah, you got to get good quality data and feed it into your own data lake, your own zone, and then teach it to fire it back out.
Yeah.
But it's hard to do.
Yeah, you definitely got to focus on the right numbers, and then how to automate those, not end up with a sea of numbers being thrown out of you that aren't telling you the right things. Anybody else got, before we move on, anybody else want to add anything to that part of the conversation? Can please use that, just because then we'll have it recorded, you see, because this is...
Yeah, another point I'd make to that, try and measure the things that are right for you and drive your business. You know, there's a massive drive now, say take Xero accounting software, you know, a massive drive to integrate with reporting software that generates all of this data that pulls from your financial system, and it all looks pretty in charts and stuff, but actually how useful is it to you? Don't be seduced by this sort of seemingly sexy AI tool because you think you need to have it because Xero says they can do it, and it feels like you need to have it. It's actually just get the stuff that's right for you.
Yeah. Okay, brilliant. Thank you. So where do we go? Well, how do we build this out? Well, I think the starting point, as you say, is we've got to know what we've got to measure, what's actually important. And that comes down to also what can we control? You know, you know, how are we going to find numbers that allow us to control and pull the levers and keep our finger on the pulse of the different operations and the different stages in the business, so that the sausage machine doesn't end up running dry. We've got to measure those results and constantly be looking at them. And then we've got to find ways to evaluate the difficult numbers. And so I've been sort of putting more thought into this process in our business lately, because I've been through stages. When I first thought about the 5 dials, I had built just 5 numbers, and we only looked at 5 numbers in the business. And then I read, and that was probably driven by Strategic Coach. And then I read Traction, and I thought, hang on, why are we only measuring 5 numbers? I'm measuring 5 numbers because I was told to measure 5 numbers. And so then I was like, well, actually, there's way more numbers that I need to measure. So then we created this much more extensive scorecard, which is really powerful for me because I can look along the line and see the pulse of the business. And I can go, okay, we're generating some leads, but not enough leads in this area. You know, this type of lead is falling short. We're not getting enough. You know, we're getting more from here, or you know, the income is good, but it's only from this part of the business as opposed to that part of the business. You know, yes, we're making lots of sales, but we've actually got no cash in the business, whatever it is. So to me, this principle is one of the most powerful principles. If you want to work less in your business, if you can read the pulse of the business by looking along a line of numbers once a week, and this should be weekly numbers for sure, then it gives you the comfort of going, okay, this is going, I can see how it's going. So we then built this much more detailed business scorecard, which I think is really powerful for the business owner. But what we've also noticed over time of using that is it becomes somewhat, people start to ignore it because there's so many numbers and so many numbers that aren't relevant to them. So I've actually now come full circle and gone back to a more refined set of numbers, but not instead of having the full business scorecard, but in addition to it. And what I think is really powerful about this is, so we now just have the key number, is actually ended up being 6, and that is the big picture scorecard. And on a weekly basis, we all need to be focusing on those 6 numbers for that business. But when one of those numbers is not hitting the target and you're like, right, why is that? What's going wrong in that area of the business? Immediately you can go back to the deeper scorecard and go, right, okay. You know, if we're not hitting our target with generating enough leads, we can look at it and go, well, actually, we're not getting any referrals. We're not getting any digital leads at the moment, but we are getting them from events. So with that information, we can make a judgment as to, do we scrap those two ideas and generate and just focus on doubling down on that? Or do we rethink the way that we're doing our digital marketing? So it's like being in that cockpit again, isn't it? You've got the 5 or 6 key dials, but then when one of those is off and missing your targets, then you can dive deeper into those numbers and you've got them there. And I suspect that my instinct is with this now, and there was actually a discussion at this conference I was at last week about this. My instinct is that I think the team will value this information and this 6 key metrics the page more, but the business owner will probably value that information more. That'll draw attention to it, but the business owner kind of understands the whole picture, but the different team members will be like, well, I know that, you know, this is my responsibility here, and this one's failing horribly compared to the target. So that's going to bring much better awareness to them, I think. So that's how we've brought it full circle. And so we've got the weekly pulse and the big picture as part of the score.